this is the 16th. This is just kind of going to be me reading the tape, talking about what I see, talking about what's going on, talking about why I like this, why I don't like this, why I think this happens, whatnot. Um, and so basically right now, I've kind of touched on the distributive sequence of the distributive nature of this chart and the broader market as a whole. But right now, what I think we're doing ever since July 3rd is building out an hourly accumulation or distribution. As far as just exhaustion above the highs occurring, late buyers being sold off to, and notable stalled progression with gaps being lower, right? So, um, my ideal positioning here, um, I think the broader context of things, the short is appealing. I think the long was fantastic down in April and then in mid-April, and then a potential few opportunities that developed into May, mid-May, post-May 12th gap. But as we see this, unstructured rally to new highs, I'm relatively bearish. And as we allow this range to develop as well, it's not the most appealing look, right? We have the rally off of the, I'm not, it is the middle of the session. I want to kind of get to some live ideas, but we have the rally stemming off of the, June OPEX kind of accumulation into the 593 June 6 gap. We see that kind of final third lower low established on the 23rd, a really nice pop and daily candle closure, and we get the rally into quarterly expiration on Monday the 30th, where we now begin to see this distributive sequence build out, right? We see the first initial kind of rally on the 3rd. That's not going to really be our top on July 4th week, half day, um, all time high, passive selling. There's not going to be our top, right? You have to understand how the auction works and the draw being to that range and the lack of liquidity during a session like that, right? So we see the kind of higher low established. We see the rally into July 9th or July 10th, right, where we see another subsequent daily candle failure, and pretty weak progression from a buyer's perspective of things. And then we see the breakdown into this week, right? We have the INWOG and pre-market, the closure relatively, flat, or the open relatively flat from Friday's closure. And then a pretty unappealing session that we had on Monday, right? We had this gap from the Friday session and we had this gap from the Wednesday session, both of them being unfilled. Um, and so, my focus here, right, within this hourly distribution. So I think that the best positioning, I discuss a lot about options versus um, shares and what's the best vehicle and whatnot. I think the best positioning here, the broader context, even since mid-June, depending on, you have you have to have patience and room to add, obviously, but I think one of the best positionings here um, is that January short side exposure targeting 564 to 590 to 580. Um, it's a really key focus of mine personally, and I think that it's very possible and plausible and probable. Um, I think that happens, right? And I think that you have to understand the time frame of your trade, as I've discussed. When are you looking for this to happen? And that's a short I'm looking to happen within quarter three, within that window from July, August, September. And so it's something that I'd be cool with having a couple percentage points of drawdown, um, especially when we're only 5% above the June highs, 5.8% above the May highs. But nonetheless, I think that the positioning built out here in terms of this general window, um, starter size potentially that cold CPI print, and then being passive with your ads into this, Vanna Charm window, closing today actually, expiration. I think that the potential for that to to be pretty vulnerable short side is an appealing one, right? So I think as far as an options portfolio goes, the only thing I'm really focused on is SPY. I think January positioning being that larger focus is very vulnerable. Obviously now you target that 600, that 580 to 586 spot, and then 564, and then reevaluate. Right, when I'm January short position, I'm not going to sit here looking for new year to date lows this quarter. Right, you have to be realistic, I guess you could say. especially with options, right? But that positioning is relative to the range that we're trading in on a daily perspective, in my opinion. So that positioning is relative to the broader context of this UTAD and the gaps unfilled below within the quarter in the window of the summer low liquidity environment kind of closing. Now, when we trade or break it down into this hourly distribution that I think is developing, ever since we saw the breakout to new highs, and ever since we saw that quarter two begin, right? That's more of a focus of mine that is based off of, okay, I think we pull back. We have a gap left unfilled from the INWOG on the 30th. We have, like I said, that July 3rd high being established, that July 10th candle taking it out. As I said, that auction, that understanding the context of the auction and the fact that it was July 3rd, day before July 4th, half day. There's not a lot of volume traded. We're going to have a draw being towards those highs that we established, and this is not really such a liquid top or a meaningful top with much effort, I could guess you could say, behind it. We're gonna have to draw and take out those highs. There's orders placed up there, and it's pretty simple concept. I like to say we don't bottom or top on a Friday. Obviously, you can go back and maybe there's a couple examples of that happening, bottoming or topping on a Friday. But I think here, in the context of where and when we're at, we're not going to see that top happen on a Friday. Last day of the week, more specifically, last day of a holiday week with the session cut in half. So we fade that on the 10th. We don't really have such an aggressive seller on the 10th as well, right? It's more of a passive seller and a gap down into the Friday session. And we're still within that Vanna Charm window, right? The July 7th was the introduction of the July Vanna Charm flows. And we're leading into this week currently where we had CPI yesterday, PPI, and bank reports that could be catalysts to spark liquidity one way or another. And that's exactly what we get, right? This is not such a top that's very, very aggressive pressing down on, even on an hourly perspective from a seller. But when we see this building out, right, and we see this, these gaps unfilled below, I think that is potentially the point within this chart where I'm beginning to focus a little shorter dated, right? So like I said, that January exposures is ideal for me, targeting, upper 500s to mid, I guess you could say, upper mid 500s, and 600 being that first trim, right? With patience and the ability to add in, obviously, leaving room for the size of add one on that position as we trade into new highs, right? But when I see this distributive range being sold off, the now second higher high sold with a gap down following day and really no true bid up here, I feel like when you break this UTAD down, we have an hourly distribution developing, and it's kind of leading into CPI. So I think the starter exposure on August puts more or less, because you are kind of looking for a 2% breakdown, peak to trough within a couple weeks, and you're just taking that starter size over the weekend is pretty vulnerable. You see the Friday gap down, there's not really much that happens, and then the passiveness behind this seller, more or less, just low liquidity on a Monday session into the week like this with CPI the following day. And what you're looking for, in my opinion at least, is that gap and trap on a CPI cold print. We have no real kind of bid, but no real ask on the Monday session. We have a gap to be filled, and we have a pretty liquid high, or pretty high with not so much volume back behind it as well. At that point within the chart before yesterday's print, a pretty immature distributive sequence. We pull up QQQ as well. This needed to have a breakout, in my opinion, right? We had this gap up from the 8th or the 9th. And we were seeing a 4 lower accumulation within there, right? And so we essentially saw the stall in the Thursday print, the breakdown in the July 7th candle, and then the gap up on the 8th or the 9th, where we saw that high sold off. But we had a gap unfilled that was being accumulated within. And we also had a notable buyer within that range, and no true kind of UTAD, like I said, that third higher high that sold off. And what do we get off CPI? We get an aggressive gap up, about 3.5 points. Well, actually, no, a pretty nice pop in general. Um, and then the CPI pop that was, sold off, right? We didn't really, it wasn't really anything crazy, but we didn't really get anywhere as far as, when the regular trading session opened. Um, so that's just that concept, like I said, of those news events, those binary events being catalysts to spark counterparty liquidity and counterparty fills, and that's exactly what we get is the third high in the kind of true UTAD of Qs. And then we get a very disgusting daily candle closure, green to red at the all-time high failure. Closing at the lows and just like nothing good about that chart. And I feel like that's just, that's very important here in my opinion. And a lot of people don't understand that one, okay, this is that full size August position targeting 620 now, right? And then we have the January exposure. And now as we develop a potential lower high here, we have the potential shorter dated, right? So we have the three higher high distribution. We kind of have the lower high already being put in, right now. I don't really think that this is a phenomenal trade, especially when we have the, lack of objective risk, I guess you could say. But I think that this is an hourly distribution panning out. I think we're going to pull back into the lower high. Um, if like I said, the January's work, the August work, and then the third and final kind of exposure I would want here is, if we get that 625 lower high, I'd look for some weekly or bi-weekly exposure to take this down to 620. And then, we see that break of structure, we can see 617 and then 615 to 613 kind of being the end all be all trade for that August exposure, right? Or maybe early August, late July. Um, but a pretty clean short opportunity on two expirations with the potential for a third expiration. Short-sided trade developing, right? Obviously, I'm much more confident. The January position is something I'd be willing to get, half or more of my portfolio in. The August position being, a weekly exposure. This week I like that short, especially on the CPI print, being able to get that full size. I think it's pretty vulnerable off of that UTAD, and we see a very gross daily candle closure with now an objective risk being established at 626. A daily candle print being that kind of gauge, and then a potential opportunity for shorter dated expiration developing as well intraday. So that's just kind of a broader contextual ideology of what I'm looking at here. Now, as far as intraday moves, I don't really like this short. If we fill the in-log, pull back to 624, I think that's a great spot to get that shorter dated exposure. I don't really, see any reason to front run that. Nvidia, this is something that I don't mind. Like I said, the shares and the options exposure is very pivotal. I don't mind the NVDS. I don't mind 30% drawdown on NVDS with exposure getting added in up here and starter size being taken at the 143 spot, 142, 143. But you have to understand that that's a quarterly trade that I'm looking for, 120, 115, 110. We see a breakaway gap yesterday with an exhaustive closure. There's no risk to reward being put in for an options trade for me quite yet, unless you're taking the intraday positioning. And I'd be more inclined to look for a parabolic short later this week, Thursday or Friday. Especially if we can continue to get those exhaustive gap ups. We broke out of the all-time highs. We had no real bid. We had a notable seller on the first. We had the higher low put in above those highs. And we taking out the pre-market lows here on Qs, filling the overnight gap on SPY. So I do think 558 and 625 could be the draw here. Expiration moves, if there is one, tend to happen at around noon. That's kind of how it happened on the 21st with that bond auction. I will say Tesla's kind of getting slammed right now in the tape. There's a big 317 seller. I don't really like the Tesla chart too much anymore. There's very minimal long exposure I'd want, and there's even less long exposure I'd want leveraged, and that is just kind of that general concept has just dwindled down ever since April, and then May there were good couple of opportunities as well. But back to Nvidia, I'm more inclined to wait for a parabolic short, trade that internally intraday, and then develop a last point supply off of like an all-time high, lower high, right? But nonetheless, I mean, this is a very, very gross candle, a very weak rally that just doesn't give you that kind of top yet. Like I said, this isn't going to be our top. I don't think this July 11th print would be our top as well. But this is kind of that influx of effort and lack of result being put in. That effort and result not necessarily matching is kind of what you're looking for here. And I just feel like it's a very like you go back and you look at AMD. I tried to front run AMD so many times during this distribution in quarter one of 2024 throughout this range, and it's like, okay, just waiting for that footprint, that big sign, and taking the intraday opportunity instead of I try to time it here, I try to time it here, and then here and here, here and here. It's like we haven't had such a clear signal until this print, until that we had some intraday opportunities throughout here as well. Like this 7% breakout on massive volume is a major red flag in terms of all that buying being absorbed, and then we see the immediate 6.5% reversal in 1 hour. So like that's what I'm looking for on Nvidia as far as an intraday options trade. I will say AMD was kind of sick. I look back and I definitely got a little bit too bearish too early. I mean, I was very bearish. So the issue is here with purely trading an options portfolio throughout this environment. The longs were great here, right? The longs were great intraday. The longs were great on shares. The longs were great. You could cut your exposure. You could re-add into April, mid-April. And that's when you could begin to focus on like a snowflake where a lot of these names have these massive 10, 20, 30% reversals from the low of day on the 7th to the high day on the 9th. And then the week or two of consolidation during the week of Good Friday and April 14th. But paying attention to the context, you can't just go longing anything, right? Paying attention to the context is big here. Snowflake off of the 30% November peg from last year with the highest volume of all time. That's a good long on comments, right? Google off of the 140 May gap fill. That's a good long on comments. Microsoft off of the 350 previous all-time highs, and then the consolidation with the reversion of the bear peg being pretty evident. That's a good long on comments, right? MU, that potential spring and then the consolidation, that is a speculative long, something that I like, but would not be as aggressive as I would on like an Nvidia and Google and these names that have a pretty objective risk, like I said, right? Which is a pretty big spot, but the comments allow you to be a little bit more flexible. So, I was very bullish down here, but I don't have a shares portfolio. I wasn't able to slam the shares and let those make my port, let those make my year, those make my quarter. Instead I longed options this day, longed them this day, and then waited for like a high or low, right? And I just got burned. I shorted gold here. I fucked it up into the 23rd, and then I longed Macy's on the 21st instead of just longing that June positioning on SPY or QQQ that I had built out on the 16th and then cut. I kind of ignored the signs and ignored the massive footprint down here and waited for really like precise high or low instead of just being flexible with my positioning and understanding the campaign established in the time frame. And I tried to short this day, right? Instead of trading that 438 high or low on the reclaim and the sweep of the April 10th lows, where we take those lows out at the beginning of the week and we see very bullish intraday tape here, right? So, I missed this. And then I shorted here, caught a nice win, gave it back, because obviously I'm not going to continue to try to short this. And then I just couldn't really get anything going throughout here, right? I had the nice short here, and then I gave back the profit, right? Trying to be a little bit Superman, trying to short this and we saw that really weak pop on Memorial, or really notable gap up on Memorial Day, and then I shorted it again, took a small win, broke even, and then that's where I began to get a little bit self-destructive. But it was just the fact that I shorted this, I caught a nice win, and then I gave it back, even though we didn't really get the closure that I'd want. And I wasn't really able to flip long on the things that looked really good here. Um, you know, MU looked pretty good here. I wasn't able to necessarily flip, buy some commons on MU, buy some commons on AMD, which was a pretty good and appealing chart down here as well. ARKK names didn't really look bad this week following the May 12th gap. Wasn't really able to just flip long, right? I mean, you could have had a pretty nice rally on ARKK commons while also building out your short exposure on 2026 out expiration in NVDS. Instead, I was just trying to time the top and not having any exposure long side. You don't even have to have the longs from the bottom, but looking back at it, there's a lot of opportunities following this gap up and this kind of higher low we put in off the 200 day. There was a lot of opportunities that I missed trying to short this, where the short's good, but we're still in that summer of George window, and we still have a lot of names that could revert a little bit higher, and I just wasn't able to pivot back bull, right? Back long focused. Because the long opportunity on options wasn't really there, minus this sequence right here. Don't like this. This was cool, but this is extensive. The leverage exposure long wasn't really appealing, but having an only sole options portfolio, I just didn't. I wasn't able to flip on a dime and get that long exposure on commons, still, be able to profit, but also build out those shorts on a higher time frame contextual basis. So, I definitely got a little bit too bullish too early. I also think that the best opportunities within this range were commons on a lot of names. I think there were 4 or 5, maybe 6 opportunities for an options trade that I really, really like, right? Because I view these as really powerful tools, but tools that I think you need to be very precise with your entries and exits. I try to be too precise down here. I cut the exposure on a progression gap reclaim and then an inside bar. And I try to be too precise with my window of April 7th to April 17th, even though we had such a historical sequence that doesn't really hold much weight anymore. The post-OPEX window, I think it just held much more relevance, the candle structure and the relevance behind the volume backing a 10% print on the S&P 500 following the sequence that we had and the massive changing of the hands. So I just was being a little bit too precise, and then I kind of paid for it, right? I wasn't able to trade this. I had Junes. If I would have just held these, added some more and accepted the 20-30% drawdown, but I was fine accepting on a short up here, but not the long down here. Finding that balance, that thin line, and going with that, right? I could trade those Junes, cover some, and then build out that short, and then build out that short cover and stop out, and then look for that short cover, and then maybe build out some commons long, but just speculative. And I took so much size on this. I took like a full size position, and I just gave it all back. It's actually insane how stupid that was, right? Especially the way I handled this trade. I covered the entirety of the trade for 40% on Wednesday and Thursday, and stopped out on the rest when I didn't really go red, and we saw that kind of lower high put in on that Thursday print and that week close, and I just was like, fuck this, I'm done, I'm giving up, I'm going to the gym. And then we get the week close, and I'm like, man, these closed up 25%, opened up the next day up 100, and then I tried to instead of just maybe taking an intraday opportunity off 580.82, I tried to swing this to 564, not really, the smart play, right? But every loss is a lesson, in my opinion, right? I don't really, I want to say I don't care that I lost that money. It's more like I don't mind the lessons and experience that I gained along the way, because I think it's very beneficial in the long run. I like Google. Will this really be an options trade? I mean, this is defending the overnight gap, and the tape has been pretty appealing to me today. But I don't really want to. I wouldn't really want to slam this with options. We are filling the overnight gap though. That's why I said, like I said, this wasn't the most appealing short off open. 625 to to new low of day into 620. If we get that, would be pretty appealing to me. Same with like 588. That'd probably be my only focus for an intraday trade, personally. Although there is a pretty nice Google bid sitting here at 182. Microsoft don't really have much. This doesn't really look too good. What else do we have? Energy. Energy's seeing the slippage. I still like Energy Commons, but I'm going to need to see something on a daily candle closure defending the July 1st print. SMH had a hideous daily closure yesterday. ARKK doesn't look at least like bad on like a 5-minute basis, but the daily chart's beginning to give you a really kind of ugly look. Still Apple at 224. I think that's one of the better shorts developing. And a top focus of mine this quarter, if we get that off of the report, right? And that would just be like a 224 back to 213, and then a lower high to like 205 if we get that. Yeah, I mean, this could, on MU, this could be a pretty clean high or low. It also could be just the top. Like I said, a little speculative. You look back at the videos I posted, I was like, as we see that happening, it's this is a 27% drawdown under $85. It's very speculative to go here and say that that's our shakeout until we see the subsequent structure. We never saw anything that's so clean to me, minus the May 12th consolidation. So I don't know. I mean, that was a good long. Could have long this back in April. Definitely not a bad commons trade, but not anything that I'm aggressively full pointing on very little no objective risk. Ford, I mean, this was a really clean 25% shares trade off sub $10 into the $12 peg from July 2024, but we're still seeing a little bit of a seller in this tape under 622. So I mean, this might be our hourly lower high, right? Like, we might not need direct discount golden pocket area. Like, this might be our lower high put in, right? Like I said, like, this is kind of your preliminary supply, your climax, your UT, your UTAD, your LPSY, and you're changing the character on this chart, and this happens off of CPI as well. I mean, this could push 620 today, 615 by end of week, which would be a 2% fade from highs. I mean, yeah, this is a gross look, and that's why I said, the August positioning is pretty vulnerable here because you can take that ad, and you can get that full size exposure on off 626 with a really objective risk to reward, targeting the 620, Wednesday gap fill, and then 615 as well for that, kind of back half of the position. But that's pretty much like the only thing I would want my money in, options wise, is short exposure SPY. Yeah, energy. I mean, these could definitely still run a little bit. VLO is really clean. Yeah, these are still kind of getting hit. But Google looks nice. Like, Google's a really good commons trade in my opinion. I just wouldn't want that leveraged exposure long minus like a leveraged like energy ETF. I don't know. Still bidding the gap. Can't be like there's just not much I can do here. You either want to hold out and trim those August at 620 or wait to add some shorter data at 625. VLO is clean. You can definitely still put in a higher low here, if that kind of harmonic volume pattern occurs. And these energy names can still trade higher. But like I said, that late May, early June long was really clean on VLO and on XLE. And then, we had a pretty massive liquidation candle, but the subsequent exhaustion happening after was really evident. And then the nice pop on the first as well. So I think these could still push a little bit higher. Especially the fact that relative to where the broader market is, we're still lagging and we still have these gaps to be filled. I think we could see like a 94 to 72 on energy if everything goes right. Yeah, this got hit. I mean, this is disgusting. Like the broader context of this showing preliminary distributive signs back in, quarter 3 of 2024, giving you a really aggressive like 25% move from the highs, and then a rally that's, looks like this, but it's just buying, 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 and then a 5% gap down on the report. It's not a good look. Not really. I don't even really look at QQQ right now. SPY's the better short here, in my opinion, on multiple different time frames, just because of the risk. Dude, Google looks really clean. I wouldn't want options on it. This is just like a reversion trade that has room left, as a couple Mag 7 names do. You look at the names like NVIDIA at all-time highs. I think this is going to be the top for a while. I think there's going to be a lot of volatility on this name. I think this can lose 30. I think this can be cut up to 40% within the next few months, right? Tesla, the failed breakout, and then like no true bid off these two news gaps, right? We have I don't really know what they were off of, honestly. Probably some stupid ass shit. But like no true like really clean. There's a buyer, but no really clean closure. Like this just doesn't speak to me that much on longs. But we'll have to see. It's a pretty nice ask at 170.6 on NVIDIA, 43,000 lot order. But there's no real edge there. I don't really like to psych levels, gaps, important horizontal ranges where there's previous equilibrium between supply and demand, and there's notable kind of seller or buyer. That's where I'm looking at in the tape, right? Pivotal, hourly, weekly, daily chart points within those names. I don't really just like look at anything, right? You have to be pretty selective with your tape reading. It's still not a signs that it's more of an intraday thing, in my opinion. On a higher time frame basis, you can have a feel for the tape, but I'm not gonna like. Not everything's off of the tape. It's more of an intraday thing, right? If I'm looking for like a weekly or bi-weekly position intraday, I'm looking at the tape and seeing how we act. But it's also gathering and collecting that information over a period of time and getting a feel for the tape of a specific ticker, right? Things like that. But Amazon has a little bit more room as well at the end of the bear peg. And Apple, I really want 224. I just really want 224. I think it would be sick. But Google, yeah. Google 190. This isn't a bad weekly chart. A lot of news prints that are getting bid, like in May and like in June as well. A lot of those are getting bid, and the subsequent reaction is pretty bullish in my opinion. But we are kind of seeing exhaustion occur at these new highs here and here and here. So definitely, like I said, a risk-off shares trade focus for me. Yeah, the only thing I'd really be looking at today is that 625 lower high. Take shorter dated exposure back down to 620s, low 620s. Other than that, after this happens, this daily print, I would love a little bit of digestion of this. Like a true hourly lower high would be pretty appealing, but this is a gross sequence, right? This is a gross sequence, and the reason this didn't work out over here, in my opinion, was because of the window that we were in, right? That summer of George. Now this is ending right now, and it's more mature, and now we have the time and window opening up for that volatility return, in my opinion. And it might not even be like a vol event. Like we had the vol event in August, we had the vol event in April. It might not be a vol event. It might be a vol event that I don't know if it'll be like a vol event. Um, I think it's just going to be a easy stair step lower, right? I don't think this is something that's just going to happen out of the blue. I think that there's a lot of things that align on a higher time frame basis of things and involvement. While it could happen, I don't know if it's going to be as extensive as either of these two because the way that these two happened, the way that volatility rose and that tape felt, resulted in those snapback rallies that gave us new highs. I don't think that's going to happen. I think we're going to see a pretty easy drip to 564 this year and maybe some increased volatility, but very minimal, and then a lower high into next year. And that could be the vol event that pushes us to new lows, right? I don't know. I don't even like to predict that much, right? I'm focused on the short exposure this quarter is kind of as far as my thought process goes on trading, you know. Yeah, not a good 5-minute closure. Yeah, it's probably gonna be it. There's not much in the tape today. Um, 625 would be a clean lower high. 626 at objective risk for those Augusts. I am looking for a parabolic short on Nvidia, the massive footprint. We have one, two, uh, 3 gap ups in a row now. So maybe make it 4 or 5, and this could get pretty parabolic, um, in my opinion. This Bitcoin daily candle is the highest since December 5th of 2024, and it's absolutely hideous. And this Bitcoin chart reminds me, I'm not going to lie, a lot of the top in 2021, right? So essentially what happens, right, is we have this, we have rally in Bitcoin in 2017, and kind of breakdown sub 3,000 of the COVID that sparks a lot of, an influx of demand, liquidity into these markets, and stimulus checks, all this shit. People are fucking buying Bitcoin like a bitch, and we see the rally from COVID lows to 2021 highs, 1,300, 1,400%, 1,500 in late 2021, and I mean, it's pretty simple, right? After such an extensive rally, we have money rotating out of these names, these sectors, these risk on these different equities and instruments, whatever you want to say. It's simple supply and demand. It's simple, value, right? A lot of these companies were overvalued, maybe that influx of liquidity injections and pumping the market and slashing rates so people could buy everything, and then we see things kind of set into reality. We see inflation go up. We see rates rise. We see things kind of slow down. The growth aspect of things kind of slow down. You're seeing money rotate out of these things. It's just not. It's just how these things work, right? And then we see from mid 2021, 56% increase in the price of Bitcoin from 64,000 30 sub 30, right? And then we see that rally from June into November, right? And we see 141% rally where we stall at the highs. We see a lot of volume and we see a really aggressive leg that cuts this down 70%, right? And I think that's what's happening here, right? We see the kind of bull flag put in 2024 into the summer, or into quarter four, my bad. And then we see that election kind of being the top almost, right? Like a lot of people bought off that Trump election win because they think that Bitcoin president's thing is going to happen. If the Fed was going to buy Bitcoin, they're not doing it at $100,000. That's what I'm saying. They probably have it from seizing it. At a way better cost basis. I don't even think that they introduced something. I don't even think they're buying any more Bitcoin. So that's very telling, right? We kind of see the daily higher high sold off with the breakdown. This got cut 32%. When did this get cut? this was like 56, so not as extensive as that. And then the rally to new highs where we now just see such an ugly daily candle closure and weekly candle developing for just, another 12% on the Bitcoin chart in 175 days, 25 weeks. I mean, like, talk about a bad amount of ground covered for that time, right? And then you look at how this happened. I mean, this was the strategic reserve announcement in March, right? This was the like 3 lower lows we had in April. We had the rally in the broader equity market. We had the higher low off the all-time highs. Then we see this breakout that gives you, all that volume on this print, right? Like, well, I guess actually, I guess it's coming in on this print, but the way that this candle closures and this volume pours in, and then we have the potential for that to be a really gross weekly closure, like, yeah, this is not going to be good in my opinion. Bitcoin sub 50K in 2027. But yeah, I mean that. I really not much more thoughts. Not much more thoughts. A lot. Only focus of mine right now is SPY on 3 different expirations as far as options go. Right. Starbucks was a clean one, but this didn't really. This was a kind of gap up that was a failure. So I talked about that internal structure, understanding the targets on your trade within an external structure, right? You have the shares opportunity. Here's the options opportunity, but you can't try to push this, 6% to 99. You have to trim appropriately, especially in the 3% gap up. So yeah, that's pretty much it. My focus is the kind of a feeling for the tape today, and that lower high that's potentially being put in on the SPY daily chart. So on an hourly distribution within a daily distribution. So that's all I'm saying.